we're still in summer. So basically, if you think late summer, the weather's pretty good. That's where we are. This is the acceleration that happens around the US election years. And this has happened every time is what I refer to as the banana zone, where everything goes bananas. And in crypto terms, the charts just look like bananas standing on end because they just go vertical. Because around the election period and the year afterwards, they all have to refinance, $10 trillion of debt. That period of massive liquidity tends to debase currency. We're seeing China coming out with the cowbell, more stimulus. The US has started the rate cut cycle. That's going to come down a lot. The EU have started. The UK have started. Everybody started.
Last week, the People's Bank of China cut a key short-term interest rate and revealed plans to reduce the amount of money banks must hold in reserve to the lowest level in at least 6 years. The central bank governor, Pan Gongsheng, also announced plans to support the nation's beleaguered property sector, including lowering borrowing costs on as much as $5.3 trillion in mortgages and easing rules for second home purchases. Pan announced that the PBOC would also provide at least 800 billion yuan, or $113 billion of liquidity support for the stock market, adding that officials were trying to develop an additional market stabilization fund. According to Real Vision founder and CEO Raoul, this is only the first wave of the massive liquidity pump central banks are expected to unleash on the global economy next year. Pal describes this liquidity pump as more cowbell and predicts that central banks will need to unleash unprecedented liquidity on the global economy within the next 12 to 18 months to avoid a collapse and continue to prop up their respective economies for longer. After China announced its massive stimulus packages, the Shanghai index rose 3.61% on Thursday, and Hong Kong's Seng index jumped 4.16%. Pal is certain that this performance will soon be replicated in the rest of the global stock market and the rest of the financial markets when other central banks begin to announce similar measures. While Pal says the entire financial markets will benefit from the coming liquidity pump, he says tech stocks and cryptocurrencies will be the biggest beneficiaries, as the liquidity pump will usher in what he describes as the banana zone. As we bring you clips from Pal's latest interview with the Julia LaRoche show, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks for tuning in and enjoy the video.
So, I've talked about this at length about the everything code and how the entire economic machine is now driven by one key thing, which is liquidity. And that's now driving the business cycle. Liquidity became the most important thing in the world after 2008, when we had a global debt reset, but not how people expected. We had it by them forgiving all interest payments for a number of years. So everybody reset their debts, didn't have to pay interest, and everybody reset their debts at a 3 to 5 year time horizon. That's all the major governments in the world, from China to Japan to the US, the UK to the EU to Canada, everybody. And since then, the world has been on this cycle. Every time you refinance the debts, they add liquidity in. Now, the use of liquidity i.e. debasement of currency, to pay for the interest payments on all the debt is the thing that causes assets to go up, because the debasement is actually lowering optically the value of fiat currency. So it's a bit of a mind trick, and people don't see it and don't understand it. But this is why markets go up. And then, over time, I've looked how cyclical this is, and that it repeats, and we can forecast it into the future by using certain forward-looking indicators as part of the everything code. And everybody should go to my YouTube channel, see that video. So Raoul, the Journeyman, see the video of the everything code. It is 2.5 hours long, but it is the most important thing I've ever put out. And so what we get is, bizarrely, it breaks down pretty much by year, not perfect, but so 2022 was macro winter. We had inflation. We had recessionary conditions in all markets. It wasn't called a recession in the end, but regardless, everything went down and everything went to shit. Next year, spring. What happens in spring? You get shoots of recovery. What happened? tech stocks, crypto, things in secular trends did really well. But the business cycle remained low. So the forward-looking things, the things that are driven by liquidity, which leads the business cycle by a significant period of time, had started to recover. Then you get into macro summer. Macro summer is when the economic machine starts firing up again. And that lends to another acceleration in markets and growth, whilst inflation tends to be falling or subdued. And that's a really lovely period because you can make money in pretty much everything. Commodities go up, gold goes up, small caps go up, crypto goes up, tech goes up, everything goes up. And that's where we are now. And so that summer period, the real footprint usually accelerates around the US election and after it. And that's when most markets have their best performance. So there is a seasonality around elections, which you tend to get strong first half of the year or first part of the year. Then it tends to be a bit more sideways, which we had in tech and we had in crypto, and where the rest of the market started playing a bit of catch up. And then you get the acceleration that goes on for the end of summer straight into macro fall, which is 2025, when really the best gains come of all. So that's where we are. So back then we were just starting. Now what happened? Crypto went on a massive tear, then had that sideways consolidation. Tech had a massive tear, had a sideways consolidation. The rest of the market's now catching up. And the next phase is the money shot.
During the discussion, Pal explained that liquidity comes from central banks and governments injecting money into the system, and it is the main driver of the global financial markets. In the US, this liquidity injection is measured through Fed net liquidity, which has three main components: the Federal Reserve's balance sheet, the reverse repo market, and the Treasury General Account. Currently, the Fed is still tightening, which means it's essentially holding on to its funds. Once it starts spending, money floods into the system, which reduces the purchasing power of the fiat currency. This constant debasement of the currency is why analysts like Pal insist that investing in financial assets, particularly the cryptocurrency industry, which has been known to massively outperform the rest of the market, is the only way to preserve and grow your wealth over time. Let's get back to Pal's interview.
Right, what they're actually doing is devaluing the purchasing power of money by 8% a year, which is the increasing global liquidity. But most people don't understand it. What happens is you have a savings account, you think you're doing all the right things, and suddenly you still can't buy a house. And you still don't buy much, you can't buy many shares of Tesla as you wanted to, and you still can't buy as much gold as you wanted to. And you're like, why? I'm saving money, I'm working hard, but I can never get up the ladder. That's what the basement's about.
Yeah,
so what it's done is cause everybody to become a risk taker. And this is an important point. So really, of all the assets that we monitor at Exponential Age Asset Management, there are only two that beat the 8% debasement plus, let's say, 2 or 3% global inflation. So 11% is the hurdle. The S&P keeps track of it roughly. The NASDAQ does 17% a year return since 2011, and Bitcoin does 140. Gold doesn't meet it. Almost nothing else meets it. So you're really herded into two assets only that can actually beat this thing and make you money. So your future self gets wealthier. People have been incentivized to do that. Now, you might say, but this is crazy because people are taking such risk. But there's another piece of magic that happened. Is the Federal Reserve and the government understand that this is the case, and they understand that we have a lot of debt, and we understand that the collateral of the debt is the savings and investments of the population. So they don't allow it to go down much. So if you saw it last time, the S&P got down 30% in 2022 and liquidity came back. So they've stopped markets falling 50, 60, 70%. Sure, different stocks can, crypto, because it's not really a big part of the collateral system, but they don't allow the collateral to fall. So what they've done, what it means for all of us, is they've taken the big risk out. We've talked about the Fed put for years, but we didn't really understand what it meant. What it is for is, listen, if you've got a lot of debt, your collateral is what you pledge against the debt, right? The whole system is built on this. That's what blew up in 2008 because the house prices went down and everyone's loans were this high. But if you think of the whole system, all the banks and all the asset management firms and all the leverage and all the private equity and all of the stuff, they don't want the equity to go down because that's the collateral. They allowed the bond market to go down because in the end it gets repaid. So it's a mark-to-market loss. But in equities, when you've got this massive retirement system, you just don't want that. So this Fed put is part of the everything code where they've just stopped that event. So they debase currency to erode the debt, make the interest payments, because if not, they'd never be able to pay the interest because you'd eat up all of GDP growth just to pay this interest because it's 100% of GDP. And they stop the big bad event. So what that gives you is the greatest macro risk-taking opportunity of all time. Doesn't mean the business cycle's gone, but overall, you've got the best risk-taking cycle in history.
Powell believes we have been given the greatest macro risk-taking opportunity of all time, as central banks will keep printing to debase the currency, prop up the markets, and stop a widespread collapse that will lead to the loss of tens, if not hundreds of trillions of dollars. This is why the renowned macro analyst is certain that talks of the U.S. economy going into recession will never be allowed to materialize, because the Fed has the tool to keep postponing any form of severe economic decline for as long as possible. Though Powell agrees that money printing and currency debasement cannot go on forever without a more permanent solution, he adds that a solution could come as early as 2030, the year he expects the AI renaissance to begin. When this renaissance begins, Powell says the global economy and markets will change forever, and investing using today's models will become impossible. The Real Vision CEO says we have a 6-year window to invest in cryptocurrencies and tech stocks to make as much money as possible before the world changes forever in 2030. Do you agree with Raoul Pall's assertion and analysis of the global economy and the coming central bank liquidity pump? Please share your thoughts and comments in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching our videos, and see you in the next one.